Hi, this is Evan Hutcheson, and I want to go over with you certain issues regarding payroll for new companies in Tennessee. As a new business, one of the first things you need to make sure you're doing correctly is paying yourselves and paying your employees if you have any employees. I want to help you understand why and how to pay yourself. First, you need to identify the type of entity that you have, whether it is an LLC or a corporation. If you're an LLC and you have no employees, then you do not actually need to set up payroll for yourself. You would instead just be taking draws out of your account. And this is as easy as transferring money from your business account to your personal account. Of course, you need to be careful with this. It's always a good idea to set up some sort of budget to have better control over the draws that you take. If you're a corporation, on the other hand, it does not matter whether or not you have employees, you would still need to set up payroll. Shareholders of corporations pay themselves through payroll instead of taking draws like the LLC owner. Now, there are many ways to do payroll. You can have one of the big payroll companies like ADP or Paychex issue your payroll, or you could try to do it yourself, or you could have your CPA do it. If it's not very complex and you want to do it yourself and you don't even have a bookkeeping system, I would recommend just using Excel. I have a quick little example here. Just John Doe, he gets paid on a bi-weekly basis, $2,000. So you just create a spreadsheet showing your gross pay. You want to show your net pay, your all your payroll tax liabilities, your employer and employer Social Security, employer Medicare tax, which both can be deducted from your taxes. These are the categories you want to show on the spreadsheet, and I'll get into a little more depth with these categories on my next example. If you want to use QuickBooks or some sort of bookkeeping software in order to input your payroll, and you still want to do the payroll yourself, then I would suggest using journal entries. Now, I do this for a lot of my small businesses, and I have, every client's different, but here's an example of one of my clients. Now, I'm using the same numbers as that previous John Doe, but here's the journal entry I use, the 3 journal entries I use for one of my clients, and it's pretty much the first journal entry is showing what is being paid to, it's recording the payroll for the employee. So if you have one employee, it's showing that there's payroll wages of $2,000, and here are all the withholdings right here, the federal income tax, FICA, and then also here's how much you pay out in cash. So that's the first part of the journal entries, just recording the payroll. Then you want to record payroll taxes, which is the second part right here. So we're showing the employer share of the FICA and the unemployment tax, which I didn't show in that previous spreadsheet, but Tennessee businesses are responsible for unemployment taxes. And then we're withholding the employer portion of the payroll taxes, which are the same amount as the employee portion, as you can see right here. We're also withholding the unemployment. So these 4 items right here and these 3 items are all payroll liabilities. We're paying those here in this third journal entry. We're decreasing the liabilities, and then we're paying that out in cash. So we're essentially recording the wage expense, the payroll expense, recording the initial liabilities, and then we're recording the payment of these liabilities right here. The way I got this, I mean, the Medicare and the Social Security are a certain percentage of your wages, but your federal income tax, I got that from Circular E. So I went down to, it's publication 15, it's called Circular E. And you can go down to what you are. John Doe's single, he pays himself on a bi-weekly basis and pays himself, what, $2,000. So I did one exemption right here, $284. I know this is really confusing. if I could explain it in a longer video, I would, but videos, we can't really do too much with a quick 10-minute video. But anyways, payroll is one of the main differences between an LLC and a corporation. As an LLC, your net income, that is your revenue minus your expenses, flow through to your personal income tax return. If you're a single member LLC, then your income goes in box 12 of the tax return. So your income would flow through right here to box 12. If you're a multi-member LLC, it would flow through to box 17. This income will eventually flow down here to taxable income. So of course, the higher your taxable income is, the higher your taxes. But in addition to the income tax, as an LLC, since you're not paying yourself payroll, you will also be subject to self-employment tax on your tax return. That self-employment tax is based on your income, and it flows down to here. And I'll pull up a W-2 real quick to kind of show you a little bit better of an example. This is just a normal W-2. As you can see, if it ever loads, it has 6 boxes, just the regular wages, the Social Security wages, the Medicare wages, then the federal income tax withholdings, the Social Security tax withholdings, and the Medicare tax withholdings. Now, the Social Security and the Medicare tax withholdings, those are your self-employment taxes. So this right here and this right here combine to be your self-employment taxes. The Social Security tax is at 6.2% of your gross wages. The Medicare tax is at 1.45% of your gross wages. When you were employed, your employer was also responsible for 6.2 and 1.45% of your wages. So here it is right here. Employee withholdings on W-2, Medicare 1.45, Social Security 6.2 for a total of 7.65. Your employer had to pay out of his profit that same amount. So a total of 7.65 plus 7.65 equals 15.3%. That total amount of your wages were paid into the government employment taxes. Now that you're an LLC, you're considered the employee and the employer. So you will have to pay both sides of this tax now. So this is 15.3% basically of your income right here that you're having to pay taxes on. Since you're not issuing yourself payroll, there are no quarterly payroll tax forms. That's why everything is flowing through on your personal tax return. If, on the other hand, you're an S corporation, your net income, remember that's still the revenue minus the expense, it's still flowing through to your personal taxes up here, box 17. But your income that flows through here is not subject to self-employment tax. Now, don't think that this means it's necessarily better to be an S Corp than an LLC, because an S Corp's net income, even though it's not subject to self-employment tax, the IRS expects that the shareholders pay themselves the earnings, pay themselves out of this net income through payroll. So that's why S corporations need to file payroll, even if it's just no employees, one shareholder. And through the payroll, of course, we're paying the self-employment tax. As a side note, I haven't really gotten into C corporations. C corporations aren't as popular as S corporations anymore for the smaller businesses. Certain big businesses have to be a C corporation, but the benefits for S corporations are just bigger than C corporations. So I'm not really going to get into that much. You can easily convert your C corp to an S corp if you want to. If you have a C corp, you still have to file a corporate tax return, but instead of flowing through to your individual tax return, your net income is being taxed directly on that corporate tax return. So you're paying higher tax rates for your corporate taxable income. which means you basically want to give yourself payroll as a C Corp because you want to lower that taxable income. But anyway, whatever your entity is, whether it's an LLC or a corporation, you're going to have to pay self-employment taxes. And I kind of just wanted to go over the details with you so that maybe you'll have a better understanding of how to pay yourself and what the potential tax liabilities might be. So I hope this helps. Thanks.